You're watching the NWR Investor Conference, November 2020. We have Damstra on the line. Damstra is an Australian-based provider of integrated workplace management solutions to multiple industry segments across the globe. The company develops, sells, and implements integrated hardware and SaaS solutions in industries where compliance and safety are of utmost importance. These solutions assist Damstra's clients to better track, manage, and protect their staff, contractors, and their organisations, and to reduce the risks associated with worker health, safety, and regulatory compliance. Damstra recently acquired ASX-listed Vault Intelligence to create a larger, more diversified workplace management company with an expanded and highly complementary product range. On the line, we have Damstra's chairman, Rossell, who was a former executive of global energy and petrochemical company Shell for more than 8 years. He was also Chief Operating Officer of Skilled Group in Australia and has been at the helm of Damstra's board for nearly 5 years. Over to you, Jan.
Thanks, Laura. Good afternoon, everyone. Jan Rossell here, Executive Chairman of Damstra, and I'll do something a bit unique. I actually won't use slides. I'll just talk. So I'll talk for about 15 or 20 minutes and happy to take questions from the audience. I know many of you have seen me present before, and I was at the last NWR conferences and have presented at other conferences in the last couple of months. I will focus today on two things. One is our Q1 results, two on Vault, and also for those who are shareholders, just a reminding that we're having our AGM on the 16th of November, so please mark that in your diaries, and the details of that you should have got your documentation, and it's also obviously on the ASX website. I will talk Q1. I mean, we've all understand COVID, how it's impacting Australia and how it's impacting internationally, and what we have achieved. And I mean, I'd say, come out of the blocks really well for the first quarter. Really pleased by our results, and our revenue on the PCP basis, same period last year, was up in excess of 30% at 34%. Cash receipts, which I think everyone looks at cash receipts in the quarterlies because that shows you the cash that the business is actually receiving from their clients, was up 7.1, and that was up in excess of 60% on last year. The cash receipts and revenue never line up. For those who some are aware, but some who aren't aware, is you have to adjust, obviously, your receipts for the accounting standard ASA 15, but you always have a positive view when your cash receipts are higher than your revenue, because obviously those cash receipts which are banked will obviously flow into revenue on a going forward basis. Another thing that we're very proud of is operating cash. I mean, we are a SaaS-based business, which generates income from recurring revenue, and also getting income from clients on an upfront basis. But our operating cash was nearly $2.5 million from the quarter, up 25%. Myself and Christian, the CEO, we pride ourselves in having a business which is growing, but also generates operating cash and generates profitable EBITDA. And we use EBITDA / operating cash. It should be anywhere from 80 to 100%. So that's the business model we've built, and we've built it on an international basis, and we believe that model will hold us well for the future. And also for us, as Damstra, what makes us comfortable is we're never at the behest of the markets. We'll never have to go to the markets for an operating cash issue. We're in control of our destiny, and that gives myself, executives, and the board lots of comfort. We've still got cash in the balance sheet, which I think is a positive thing. We've done acquisitions, as people know, and we're incurring costs doing those, but cash in the balance sheet's there. But we're generating operating cash on a monthly basis, and it's been every month this financial year so far. I also called out in our quarterly reports gross margin. Our gross margin continues to inch up, and that's always a journey that you strive for. So now it's at 72%, up from last year FY20 of 69%, and that's just showing the scale we're having. The more revenue, and if you're 60-70% of your costs are fundamentally fixed, but obviously that should give you gross margin expansion and obviously operating cash flow expansion too, and that's something we're also very proud of. Our user numbers are up fairly significantly, in excess of 400,000. And I suppose what did please us too is, we're continuing to put clients on. In the quarter, 47 new clients that came on into the Damstra business across a variety of different modules. Moving on to Volt, we completed the transaction on the 19th of October, and many of you would be aware of that. It was via a scheme of arrangement, and that was executed, I think, from a scheme perspective, very well. We were very engaged with Volt, their advisors, and both the teams worked expeditiously to get that to occur. And obviously, the shareholders of Volt decided to vote for the transaction, and we were pleased by that. I think investors, as many on the phone are, there's not many schemes that have got up in Australia in the last 6 months, and we're proud as Damstra to do that. I think that also demonstrates to our investors, and I've had a lot of that feedback, we are developing capability in our organisation where we actually did this transaction and executed it seamlessly. And mind you, we actually didn't use an investment bank. We did it ourselves, which saves money from a shareholder perspective. In terms of Volt, I'll talk a bit about later, but what did please us too, even before we've completed the transaction, we've had 3 Volt clients that are now using Damstra modules. So even straight out of the blocks, part of our methodology of why we acquire is cross-sell, and it's already occurring, which is an exciting perspective from us. In terms of what we did disclose to shareholders in the scheme documentation, but also in past presentations, we were targeting $4 million of synergies. And as of today, we're in excess of $2.5 million of synergies. And I'll go back a little bit later on to tell you where they've come from. It's important from our ethos is when we acquire a company, we integrate it, one from a people perspective, importantly from a product and technology perspective, and also to remove duplicate systems, suppliers and roles. We've done it before and we're proving it again, where you can marginally cost an acquisition, but you've got to integrate. You just don't buy a business for a land grab or for clients. You need to buy it so it can be integrated and then the products can be cross-sold. That's the only way acquisitions are successful, because if you continue to do acquisitions and you don't do that, you'll have a spaghetti as a business in the out years, and that's something myself, Christian, and the board won't accept to do. I will call out some key metrics just to reinforce what Damstra is about to me. I mentioned user numbers as of the end of quarter was about 420,000 clients, 326 clients, and we have clients across the globe now, obviously Australia and New Zealand, a number of clients in the US. We have, I think Volt has brought us a Southeast Asian option. We have clients in Singapore, Philippines and Hong Kong, names like CLP. And for Australian investors, they own Energy Australia, Petron, a petrochemical company in the Philippines, Keppel, a major industrial conglomerate in Singapore. So before, Southeast Asia was just, I would call a byproduct of what we do, because clients use our product. We don't have to have offices in countries where our products actually are. But now that is another growth option for us. In terms of the revenue, recurring revenue, we're always around 90%. A lot of our clients have been with us for a number of years. Our bigger clients have 3 to 5 year contract, and there's a high recurring revenue. Net client retention, which I think another key SaaS metric people look at when they look at SaaS businesses, and ours is around the 150, 120 mark. And for the uninitiated, that means if you have the same clients, same time, this time 12 months ago, have they grown with you? And that 120 is showing to ourselves as a business, but also to investors, that clients, when they buy a Damstra module, they hopefully buy a second module, third module, fourth module. So for those who are interested, there is a slide in our FY20 pack, and I call it slide 13, the magical slide 13, because a number of investors asked me about that. And that is a client that started with us with 1 module. We went to more sites, had 2 modules, and now they have a third, fourth, and a fifth module where they're using fever detection, they're using our e-learning system, they're using access control, and now they're trialing our paperless module. I will talk about people a little bit before I get on to Volt. I mean, at our last quarterly and also full year, we talked about a growing North American footprint. We've put more people on the ground in America, predominantly BD and the sales function, and also developing our channel partners, because building capability is critically important in this business. But also as a board and as executive, we continue to develop our capability. We recently appointed Sarah Lamila to our board. She's on the board of Whisper, and many of you who follow Damstra would know Whisper, and she had a lot of North American experience and was actually one of the first salespeople at Twitter, for those who don't know. So that's an interesting and exciting board appointment for us. We had two other senior staff appointments, Kimberly Marshall, who actually worked for Seek in the early days and was HR director there, and she's head of people. And then we've also got Catherine Vospa, who's head of our chief in sales and BD in the ANZ. And for me as a chairman, while these are all senior appointments, diversity is important for our business to sustain a growing business longer term. You need to have diversity of your board and also diversity of your senior executives. That's something Christian and myself pride ourselves on. I will go on to the Volt transaction. I am talking about Q1, so for those who've got the 4C in front of them, there is on the second page a map, the Damstra global footprint, and I just give that for people to have context of what we are now that we've completed Volt. You know, our product is in more than 11 countries globally. We have more than 500 clients. Our user numbers will be in excess of 600,000 users across the world. The interesting characteristics about the Volt transaction was very similar business model, you know, SaaS-based, per user payment, high recurring revenue, contracted clients at the large end. And so our combined profile will have recurring revenue once again. It's in excess of around the 90% mark. Concentration for our top 10 clients will reduce, and that will be around the 35 to 40% mark, which I think gives investors comfort that we have more diversity of revenue than we did a couple of years ago, which is a positive thing. And we have offices now. I mean, we've got offices in Australia and New Zealand, but now in Singapore, in Denver, also in the UK and the Philippines. Part of the Volt transaction that also excited us was building R&D in terms of team. You know, great companies and great technology companies only do it by investing in R&D. However, I will say that Christian and myself, we take a very particular view in R&D, and we'll track it between 25 and 30% of revenue, but you know, more than 70 staff. But we have, you know, 3 buckets. It's, you know, the base product. Are you spending money on your base product? Because you need to, because if you don't, you'll lose clients. And I think a reflection of our success so far is our client churn. Our client churn is negligible. In our full year, it was less than 0.5% of revenue, and it's continuing on that basis. We just don't have client churn. So it's a flag stick I think most people use. If you have client churn, people say, is your product actually sticky? Well, our product is sticky. The other component of R&D for us is integration. We've done some acquisitions, we've developed new products, and we're integration manic from our perspective. And for those who knew the Volts business, there was 2 products. One is an enterprise product, which is a bit like a smaller cut down version of Damstra, and that will take about 12 months to integrate because there is a lot of old code there. It's been built over 10 years, a robust system, but that needs to be integrated. The solo product, which is what really attracted us to the Volt business, all around mobility and managing people, seeing where they are, and COVID gives us another tailwind. That will be integrated fully in the next couple of weeks. It should be by the end of November. So that was a seamless integration of product. And you can see the way I talk, it is really critical, integrated. And the other area is, you know, what are you doing with your base products? are you investing? So R&D, once again, your present product, integration, and your new products, and products like fever detection, paperless, RFID, Volt. We've just launched a satellite product for Solo, working on vessels in the ocean. This is where we spend our R&D, and the beautiful things of all those 4 examples, in terms of those 4 products, if I call it fever, or if I call it paperless, or if I call it RFID, or if I call it satellite on vessels. This time last year, our business had none of those products. Today, we have clients using those products, and those products are generating income for us today. So if I talk about that in context of products, well, what is exciting, and I'll call up a few products. I mean, a fever detection module, and for those, they might have saw some LinkedIn posts from myself and Shaw's, a stockbroking firm. I was actually at Flemington Racecourse today. All of you, or most of you, would be aware the Melbourne Cup was on at Flemington, and we've been working with the VRC on a fever detection tagging system, which they wanted to trial, albeit we knew crowds weren't going to be there. They were saying we need to develop something for the future, and they wanted us to actually run our system at Flemington over the carnival. So I was there today. Obviously, no racing today. The Cup was yesterday, and Oaks Day is tomorrow. But I was there meeting the general manager of operations from the VRC. Also had a call with the CEO of the VRC, and we had a few clients there and investors that came and saw the product, and that's on a few LinkedIn posts. And that just shows another thing with that product, which is now being deployed heavily in mining and construction. And we've called it out in some releases. Our run rate on that product is already at $750,000 revenue a year, and growing. But if someone would have said to myself or Christian 12 months ago, you'll be speaking to the VRC at Flemington Racecourse to help give them a solution, I would have said, why would I go there? I focus on utilities, construction, NBN, mining. That's where our core is. But this world, unfortunate world of COVID, has given us some tailwinds and some opportunities abroad. The other exciting product from Volt, which we haven't made a market announcement on, but we'll talk a bit more at our AGM, and that doesn't need to be disclosed because it's at this stage not material for the bigger Damstras. 2 weeks ago, it's now been fully deployed in Keppel. Keppel's one of the largest industrial conglomerates in Singapore, and they manage a lot of the ports in Singapore. So, 3,500 people now have the Solo product operating in that particular environment, and that is now run rating at revenue for us $40,000 to $50,000 a month as of last month. And we'll talk more about that at our AGM. And people look at Solo, it's a mobility product, but it's also a COVID contract tracing product. But it's more born out of, we have people's information, we have access control, we have competence, we have learning. And it's more about when someone goes and moves in an industrial or operating site with with themselves or with other workers, where are they located? Are they moved? Have they fallen? And the example that I give, when Keppel were trialing the product, they actually took it up a high rise, 10 to 15 stories, and put a watch and put a mobile phone in, because it's an application that can be on a phone or a watch, and threw it over threw it off the 15 floors, took it back up, took it back up again. And they might say, why are you doing that? Because what they were testing for was, when did it fall? When did it hit? If I lifted it, how long did it take? Because what happens in work environments, and many of us are work environments, people are really fearful of, is a worker, have they moved horizontally a few meters very quickly? That means they could have fallen. Have they not moving? It means they could be injured. Or in terms of contract tracing, are they in an area they're not supposed to be, or have they passed someone, and can we actually have that data? So we have all that information now on that individual. And then Keppel, one of the reasons they made the final decision was, unfortunately, they had a little while ago a gentleman that was injured, and he wasn't found for 14 hours. And after the autopsy was done, the verdict was that if he would have had treatment within 2 or 3 hours, he could still be alive. And that's part of what Damstra does. I mean, yes, we are a SaaS-based business. We are technology-driven, but we're all about keeping people safe, keeping the environment safe, and we have solutions for clients and contractors where we have the data, we have the learning, we have the access control, we have the mobility products, we have the paperless products, which can reduce risk on site. But if something does happen, all the data is there. You can analyze the data for particular trends, or in a live environment, you can see where people are at any moment in time, and you can see what time they got in, what time they left, or who they were working with at a particular time. And we find that, a compelling proposition, especially in this particular environment. If I'll go on to the Vault integration, I did speak about it before, about the synergies of 4 million, but being very manic on integration. I mean, we have a new organisational structure. The ex-CEO of Vault and Chief Operating Officer now have new roles reporting to Christian, our CEO, and I think that's critical. Part of doing a successful acquisition is getting management of the acquired company on board and them being part of the team. And so comfortably on board, we've got one new organisation in place. In terms of synergies, I see we've called out 2.5 million of the 4 already achieved. And people go, how have you done that? I mean, there's a simple example I gave, which is in our 4C, is we looked at all the systems and suppliers, and there's 30 of them. That we're going to rationalise, that we've already rationalised. Some are easy, like you don't have 2 boards, you can rationalise insurance policies, you can rationalise some software products, 2 offices we've rationalised, and obviously some duplicate roles in the organisation. So we're very comfortable on the synergies being achieved. And those of you who were Vault shareholders or looked at Vault when we did the acquisition, I mean, we were very open about it. I mean, they were your typical smaller SaaS-based company. They were, growing from a revenue perspective, but were burning cash, weren't making operating cash. But the way we'll get these synergies, we'll be able to close that operating cash flow very, very, very quickly, and then go back to where Damstra is, which is generating operating cash and generating EBITDA margins in excess of 20%. So some may ask later on about where we are on that journey. So as I said earlier, on the 16th of November, we'll have our AGM, and we'll spend a bit of time explaining the new financial metrics for the new business, and also where we are on the journey in terms of revenue and synergies. So I think I've been going now for a bit on 20 minutes. So I did try and cover our financial results for the quarter, some metrics around what we show the markets in terms of SaaS, and I think most people would see them as fairly strong. And also talking about the Vault transaction in terms of how that's come together, some initial success in terms of synergies, but also importantly clients, our path and journey. And the last comment was, our AGM's on the 16th, where we'll talk more about our business going forward in a couple of weeks. So on that note, happy to take any questions. Laura, thanks.
Yeah, thanks, Jan, for that very engaging presentation. We've got a couple of questions that have come through. Should we expect the initial solo sale to Damstra customers this calendar year once it's integrated later November, or would that be something that happens next? I
would expect so. Yeah, no, I'd expect so. So we've got a couple of our clients, and I'll give you a case in point. There's one client who has our access control system, who's taken our fever detection cameras, and it's actually a mining client. So a really interesting example that they use RFID for a shot fire blast zone. So what that is, in very simplistic terms, mine sites actually have to blast to get to, obviously, to the commodity that they're mining for. And then you've always got people around, and what they do, you use RFID and you check people, are they there, are they not? But you're always worried that a moment in time, the person may have moved past the beacon. So they're actually trialling it at the moment to look at it, because what we can do with the Solo product, it can be on a watch or a phone or a lanyard, and then you can actually send alerts to people saying, where are you, John? Where are you, Sue? And then everyone's got to press the button. Yep, alert. Yep, alert. And then they can do it again. Yep, alert. And so they know the area is clear. So that's an example of where some Damstra clients are looking at the product, so in particular mining and construction. So I'd think, during the course of this calendar year, we'd be looking at cross-sell of the Solo product with a number of Damstra clients, and then continuing to sell Damstra modules into the Vault clients, albeit I think the modules will sell into the Vault clients because they had a good enterprise product. There's a big demand for paperless and e-learning, which we're very strong on. And I'll give you an example of paperless. We have one client now trialing at a few sites, and this is a serious opportunity for us where on a monthly basis, they're going to replace 50,000 forms. And so this is a major operating site at a mining client where they use paper and a variety of other tools, and the trial's going very, very well, and they're replacing 50,000. And these forms are all automated, but importantly recorded in the database against the individual, and so everything can be audited, mapped, and workflows. There's a huge amount of work behind that particular thing. So a lot of clients in the Vault arena, which we're very HSC focused, we're looking for the paperless option for the HSC functionality, and we're looking for also learning. The other thing there's interest everywhere is obviously the fever detection camera. But I will say something. I mean, all of us are exposed to, we've been to restaurants, we've been out, someone puts a Harvey Norman $100 camera against your head and you feel good and you're right in. But that's not what we're about. We sell an integrated module. And I'll give you an example. And I was at this client site. It's good as an executive chairman, you actually speak to clients and you go out there, but I was at this client site and, they looked at a very complex solution, and then they said, Jan, your solution works because here's the person who's getting their temperature taken. Every one of those are recorded. I can see what their temperature was at what time when they entered or when they exited, if I want to get their temperature taken in. And they said the real reason why we love it is, look at I used to have a person standing against that other camera, writing their name down. John Smith, 725, Sue Stanley, 825. How many restaurants or places have we all been to recently where they write it on a bit of paper? Mm-hmm. So we're automating that process for, heavy industrial clients, mining clients, etc., because it's a module. So it's not about a camera, it's a module that can do this level of functionality. So sorry, long-winded answer to the question, but I thought I'd just give a bit of...
No, that's good. That's really good for context. And as you said, it is good to get out there, I suppose, as the executive chairman. You can actually go out and meet your clients. You've got that leisure to do so. We have a question on acquisitions, whether the board's focus will remain on acquisitions that can expand the offering to clients, and potentially with that, what do you see that you're missing in your offering at the moment that you might look to add to the offering to bolster the business?
Yeah, that's a good question. What we do is we have a 2-year product pipeline. So for us, everyone knows starting to get to know our modules. We do the workers' competence, we do the access control, we do the paperless, we do HSC, etc. And we do mobility with Solo. So we look at all those products and we map where do we want that product to actually be in the next 36 months, and what are our clients telling us? And there are gaps. I mean, some clients want deeper RFID functionality. Some of our mining clients, we don't have a fly-in, fly-out module for workers, and we've got all the worker data, but we actually don't have that module. Worker scheduling, I mean, we could do it, but we don't have that module. So there are areas in our products where we could expand and go deeper, but there are even things like I said to you, we just launched a satellite pilot for the Solo product for vessels offshore, because they wanted to see where their people were on the boat. And so that's where we'll continue to innovate. So we tend to look at a view of an acquisition, and Vault was one of the reasons why. We were working on a mobility product in Damstra, but we'd been tracking Vault for a number of years, and obviously we did the transaction because that was part of our product pipeline. So we'll take a view of where's the product even before you look at client and geography, and that's what grabs us first. And then you look at the client list, the recurring revenue, and can you do a fair deal, etc. Having said that, I will say that I, in my role, get inundated with acquisition opportunities every day of the week, and we only talk about the ones we do, but we say no to a lot. If we were going to do one, if I own the board and the executive team, I'd think we'd like to look something internationally rather than Australia, albeit there are some opportunities in Australia, because we are an international business. 20% of our revenue is offshore. I mean, my and Christian's vision is FY22. While our base business is growing, we want more of our revenue to be international rather than ANZ. If you're owning Damstra or you're buying Damstra, you're backing a management team that's growing, getting more capability, getting a better product, but has a global footprint. And so we're all about an international story, not about an Australian domestic story.
Mm-hmm. Thanks so much, Jan. Plenty of food for thought there, and lots of strategic insight as well. Much appreciated.
Thank you. Thanks, everyone.
Thank you.